Hello everyone, welcome to E-Learning Academia. This is Yashoda Srinivas, your tutor. A lot to know, a lot to learn. This is a segment of crisp notes within 10. Here in this segment, I hope you have watched the previous session. In this segment, we are going to discuss how to calculate the value of closing stock in consignment. This is actually the 6 marks problem which is frequently asked in your question paper, Bangalore University of 2nd Sem BCom. So this is our channel. In this we are doing advanced financial accounting for 2nd semester BCom, which is for accounting for consignment related problems. So this is my channel, E-Learn Academia. Please subscribe to this channel and hit the bell icon below to get regular notification, and click the like button as well as share to whoever is in need of this video. Let's move on to the session. So this is a very nice performer for regarding this consignment accounting, where we are going to discuss regarding what is the cycle which is followed while doing consignment accounting. So this is actually the thing which you are going to learn, accounting transactions. What do you mean by accounting transaction in a consignment accounting? There are two parties. There are two parties in the consignment. One being the consigner, and second one being the consignee. Both these persons are very important while you study. These people are just exchanging the goods for sale, for selling it to third party. Okay, so that is what is the difference. Whenever first seller sells it to second seller and it is not for final consumption, then that type of process is called consignment. That type of process is called what? Consignment. Consignment is all about just the sale of goods between the consigner and the consignee. There are two different people who are selling for the purpose of making money or profit or earning commission. So this is the main intention why there is a consignment. Okay, this is different from sale. It is not used for final consumption. In this class we are going to study about what is the process which is involved in a consignment. First, consignor sends the goods on consignment. The first seller is going to sell the goods on consignment. Okay, he is going to transport the goods into consignee. Okay, he is going to transport the goods into consignee. He is going to transport. It can be in any vehicle or any logistics. So next, consignor's expenses. So what do you mean by consignor's expenses is, it can be non-recurring expenses, it can be recurring expenses. What are non-recurring expenses? Non-recurring are those expenses which are which is not going to appear for the next time, which is not recurring in nature, and it is not going to come again and again in the future. So those type of one-time expenses are nothing but non-recurring. What do you mean by recurring? It is an opposite of that. Opposite of that means whenever you are taking an expenditure for the first time and it is going to repeat, it is repetitive in nature and it is going to incur again and again. So those type of expenses are nothing but recurring expenses. For example, it can be insurance, it can be go down rent, anything for that matter. Okay, so these type of consignment expenses which are divided into the non-recurring as well as recurring expenses. So these are expenses are borne by consignor only. Okay, you please understand, whenever he transfers the goods to the consignee, the person who is taking the goods, there is only shift in the title of the goods. The ownership of that will be staying with the consignor only. The consignor only will be the owner. He will only be the owner. He will just shift the title for sale. He will be appointed as an agent. He will be appointed as a mediator. Okay, he is just doing the sales on behalf of the consignor. That's all. So that is what is the advantage, and that is what is the main crux of the consignment accounting. So here the ownership is not transferred. Hence, if the ownership is not transferred, all the expenses are borne by the consignor only. All the expenses are borne by the consignor only. Okay, since the ownership is with him, this person, consignor only, will be borning all the expenses. Okay, so next, consignee pay advance. After he receives the goods, he is going to pay some advance to the consignor. This advance he will be paying to the consignor. Then after coming to his place, he will be unloading the goods and he will be storing it or preserving it in the godown. He will be incurring godown charges. He will be incurring the insurance in godown. He will be charging the godown rent. Okay, so all sorts of security charges, everything for that matter, it is all relating to consignee expense. They are also divided into non-recurring as well as recurring. Both are there, which is borne by the consignee. Next, what happens? Even though he pays the expense, later the consignor will pay this fellow, consignee. Okay, he is not the final person who is going to pay. Sometimes he will not give the money or give the money for meeting his expenses. At that time, what happens? The consignee will be paying for some time. For a short period of time he will be paying. Later that amount will be reimbursed by the consignor. Okay, so these are met by the consignee at a small period of time. Okay, next, consignee sells the goods. Next, what does he do? He sells the goods on behalf of the consignor. Next, commission is due to the consignee. Why this consignee should bear the risk of selling the goods? His main intention is to earn the commission. Whenever he sells so much of goods, upon one unit he will be getting the commission. Okay, so that is the main intention why he comes into picture. He is making an income out of it, and commission is actually due to the consignee after he sells. Okay, next, valuation of closing stock lying with the consignee. After some time, so for example, 100 units was sent by the consignee. 80 units is sold. Another 20 units will still be in the godown. Okay, so what will happen is, this 20 units are nothing but closing stock for your company. That 20 units, this consignee will be giving it to the consignor. It will be lying in the closing stock. It will be a current asset. Okay, in the future they will get the revenue. They may earn the revenue out of it when it is converted into sale. Next, profit and loss. Profit or loss on consignment is nothing but whenever there is more of credits, that is incoming of cash, than expenses. Whenever your revenue exceeds your expenditure, then it will be incurring profit. Whenever your expenditure exceeds revenue, then it will be incurring loss. So that we have to calculate. At the end of the day, that position, that financial position of ascertaining the profit and loss is very much important, right? So that is what is the main intention. So next, settlement with the consignee. He is going to settle the accounts. Next, closing ledger accounts. Here all the accounts should be closed. Again the cycle repeats. So this is what is the fine process of how we do this accounts. We are continuing with the next slide. Consignor consignee relationship, how it should be. What is the relationship between the consignor and the consignee? The consignor is the first party who is going to sell you the goods or stock. So second party who is purchasing or taking the goods from this consignor is nothing but the consignee. Okay, he is also a seller. He is the second seller, seller 2. He is seller 1. Both of them have no intention for self consumption. Okay, so that is the main criteria. He sends the inventory, he holds the inventory for sale. Next, own the inventory, do not own the inventory. The ownership is with this person only. He is just sending the title of the good for him to sell. He focuses on making, that is manufacture of goods. He is mainly focusing on selling. Okay, he earns net sales. He can return the unsold inventory. Okay, he earns at the end of the day. He is the person who is going to make earning of the profit. He just earn the commission, that's all. He is at the end of the day all the profit and losses, whatever the company is going to get, any loss for that matter, any profit for that matter, he is the only person who is in charge. Who is that? Consignor. But the consignee will be getting only the commission. Okay, so the commission will be given to this person, that is consignee. Okay, so this is the thing. So next one, risk on consignment. The risk on consignment is kept with him only. The risk is actually transferred to him. No risk is carried by consignee. Okay, so he can return the unsold inventory also. Can return the unsold inventory. Whatever we told, the closing stock. The closing stock will be sold or returned to him. Okay, so this is the thing. Let us move on to the next slide. So this is actually what we said that time. Consignment, as we said, consignor and the consignee, two people or two parties who are concerned. The first party, the seller, is nothing but the principal. The second party who is concerned is nothing but the agent. He is just an agent of selling the goods. So here what is going to be said is the goods is sent by this person to this person for sale. So later in the books of the consignor, we need to prepare consignment account, goods sent on consignment, and consignee account. These three accounts we need to prepare. Next, in the consignee account, we are going to prepare consignor's account and related ledger accounts whenever they ask you, particularly in the question paper. In this slide, you can just see that he is the consignor and this person is the consignee. He is having the title with him and he is only responsible for everything, and he is just the custodian. Okay, he is just the custodian of the goods, and consigned goods belong in the inventory of the consignor. He is the person at the end of the day who is taking care of all these goods. Okay. So let us move on to the practical sum. In this question paper, which is relating to 2019, they have asked relating the calculation. They have asked relating to the calculation of closing stock, value of closing stock. Okay. So this is what is studied here. Okay, for your reference. So next, what is going to happen? We are telling about, there are two columns. There will be two columns where you are going to study. So it is a particulars, quantity, amount column. Okay, so first, goods sent on consignment. First you have to consider the goods which are sent on consignment. Then you are just going to learn about goods sent on consignment Please mention the quantity here as well as the amount here in this column. So next what you have to do, you should add the non-recurring expense of the consignor. Whatever is one-time expenses for the consignor, first seller, then you should add. Okay. So next one, you will be getting something called cost of goods in transit. What is the total cost of goods which is borne in transit? Transit means transportation. Transportation of goods from consignor to consignee. What is actually the cost which is involved? Okay, so you'll be getting that. Later, you have to deduct the normal loss in transit. Whenever there is a transportation of goods in the transit, if there is any normal loss means unavoidable losses. Unavoidable losses means, for example, if you have grown in 1 acre of land, 1 acre of land, 25 quintals of rice, okay, or paddy. While harvesting, some paddy will be just uncontrollably, unavoidably out of your hand, you will lose it. Yes or no? That is nothing but normal loss. Normal loss andre there is nothing called avoidable alla. It is not in your hands. Okay, it is in the hands of the nature. Okay, so it will happen for everybody. Okay, normal loss in the process it will happen for everybody. Okay, so that is what is called normal loss. Abnormal loss means what? It is unnatural losses. It can be theft, burglary, it can be marine accident, it can be fire accident. Okay, so these type of abnormal reasons or abnormal causes which is leading to losses, so these are nothing but abnormal loss in transit, in transportation. We are talking about transportation, normal and abnormal losses. These you have to deduct. Then you will come to a segment called cost of goods received by consignee. Okay, so here from this point to this point, the goods are transferred to consignee. Now it is with consignee for sale. In the hands of consignee, what are all the things? Add the non-recurring expense of the consignee. What are all the non-recurring expense? Means one-time expenses of the consignee we should add, not the recurring expense here. Less normal loss in go down. Here we spoke about transit. It is really relating to consignor. Here we are talking about go down, because after the goods are have reached your go down, it is nothing but the normal loss should be calculated in the go down only. Normal loss andre it is nothing but a normal loss andre unavoidable situations, okay, which is not uncontrollable. It is not in your hands. Okay, so those type of things are nothing but normal loss in the go down. It can be while packaging your goods. Okay, some normal loss will be there. Okay, 100 grams, 200 grams, like this. It is going to happen in the process. That is actually minimal. Okay, so next one, abnormal means abnormal which is not at all predicted. Okay, not at all predicted, not at all foreseen, and it is from the unnatural causes. I told you, theft, burglary, it can be marine accident, fire accident, anything for that matter. Okay, so this is the thing. So if we proceed further in the same table, goods available for sale. The goods available for sale will be here, will be with you. Okay, the goods available for sale, you have to write it here. Next you have to less the sales. Then you have to less the sales here. You will be getting something called closing stock. Okay. Now we have come to the main segment, that is in the Bangalore University they have given this question paper question. Okay, so regarding this whatever is there you have to study. Let us discuss one by one. Okay, so second semester AFA question paper, it was seen in 2019. Okay, so be very careful. So Guru Raj, he is a consignor of Bengaluru, or consigned 1000 kgs of oil at 60 per kg to Shrikant of Mysore. He is the consignee. Keep this in mind. So he incurred 2000 rupees as unloading charges. He incurred unloading charges. Okay, the Shrikant, what he is doing, he is incurring some expenses. Okay, now he is whenever the goods came to his godown, for unloading the goods he is charging something, he is being charged something. So that something is nothing but unloading charges. This is a one time expense, hence it should be considered, it is a non-recurring expense. Okay na. So next, 4000 as godown rent. Godown rent is recurring, every month you need to pay or every quarterly you need to pay, this is a recurring expense. Okay, and 3000 is a selling charge. This is also relating to recurring expense only, because selling expense, until and unless you are promoting the sales, this will be incurred. Okay, so it is repetitive in nature. Okay, so then normal loss in weight is 80 kgs. Normal loss means what? Normally, unavoidably, it has been lost in transit. Whenever you are transporting from Bengaluru to Mysore, this normal loss of 80 kg has happened. Next, Shrikant sold 680 kgs of oil at rupees 100 per kg. Find out the value of closing stock. So this you have to find. How much is left out with him? What is the value of the closing stock? As we have already discussed regarding the pro forma of it, I am not going to tell. We are moving forward with the problem as we have already seen the pro forma. So this is what is the problem. See the problem. Calculation of value of closing stock. As we have mentioned earlier, there should be 3 columns: particulars, amount, as well as quantity, as well as amount. So in this you have to mention goods sent on consignment. He has already provided that 1000 goods, units of goods has been sent to you. Yes or no? So per unit cost, you just see how much is there. Okay, we'll go to the previous slide. You just see here 1000 kgs of 60 rupees each. Okay, 60 rupees each. So what you have to do now? We have to go again and we have to write it there. Okay, so this is what is the thing. So be very careful while doing it. So 1000 into 60 rupees. So 1000 into 60. You will be getting this amount. So the next thing what you have to do is please add whatever is there in the problem. So non-recurring expense, I already told you, only the carriage and freight. Only the carriage and freight should be considered here, because all other things are recurring. This is the only expenditure. Carriage and freight is nothing but the tax what you are going to pay. Okay, so regarding this, there is only 10,000 expenditure to the consignee. Okay, so next, the cost of goods in transit. You will be getting some value, that is 70,000. 60 plus 10,000. 60,000 plus 10,000, you will be getting the value of 70,000. Okay, so next one, less normal loss of transit. What you are going to tell now? You are going to less the normal loss in transit. It is 80 rupees. Okay na? So 80, quantity of 80 kgs. So that you have lost. So you have to deduct that. If there is any abnormal loss, please check in. There is no abnormal loss as such. Please put nil. Then you will be getting something called 1000 minus 80, that is 920 rupees. Then here nothing as such, value is not there. Directly you put 70,000. Okay. So the next one is add this is nothing but called as cost of goods received by consignee. I told you in the pro forma, cost of goods received by consignee, the same thing has been said here. Okay, so the next one is add the non-recurring expense of the consignee. What are all the non-recurring expense of the consignee we should add? In this, only one thing is related to non-recurring, that is unloading charges. I told you, whenever there is a transportation of goods, that time what you are going to do, you are going to unload the goods. It is a one-time expense. It is non-repetitive in nature. Hence, only 2000 is taken. Go down rent selling expense is not at all taken because they are recurring in nature. They are repetitive. Okay. Next, less normal loss in go down. There is no normal as such. There is no abnormal as such in the problem. So, we can directly move on to the next thing. Next, what we are going to do, please check in, please see here. Next, we are going to continue with the pro forma. Goods available for sale. What is the goods available for sale here? It is 920 units. 72,000 is actually there. Okay, 72,000 is actually there. Next, what you have to do? You have to consider less sales. Sales is this much. Okay, please be very careful. You have to write 680 units. Okay, so 680 units is the actually the units which you have sold. Then you have to calculate the closing stock. How to calculate this closing stock? First, you have to go write a note number 1. Write a note number 1. In this, you have to do calculation of value of closing stock. Okay, if the total value of 920 units is this one, 72,000, then what would be the value of goods? Then the what would be the value of 240 units? Okay, so what would be the value of 240 units? So that is what you are going to see here. Okay na? So that is what you have to do. There is nothing but cross multiplication. You have to do cross multiplication over here. If for 920 units, if 72,000 is the value, for the value of 240, then what is the value of it? That is nothing but the question mark. Okay na? So then you have to cross multiply. 72,000 into 240 divided by 920, you will be getting 18,783. Okay, this is what is the problem. This is how you have to do the problem of 6 marks. Okay, so that is what is very, very important from your side. That is what is very, very important. So please do understand and subscribe to the channel. Click the like button and share it with your needed friends, and press the bell icon and get the regular notifications. So this is what is my class, and thank you so much. I hope you liked the video. The session was very informative and educative. Please do subscribe and press the bell icon for regular notification, and meet you soon. Signing off. Take care. God bless everyone.